Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend wrap-up trade plan for November 23rd, 2008. AccendoTraders.com. Effective trade plans delivered daily. Each night when we come together, we work on our trade plan for the next trading session. We always want to check what's going on with our existing open positions. But on the weekends, we want to see what economic news is coming down the pipe, earnings. We also want to read the blogs and newsletters of some of the experts and check our sectors for trends to see what's coming down the pipe as a global sense and not look so fine-tuned and a narrow. We want to look at a broader sense of where the market is going. Scan for new trades, set alerts for the new trade, and always we want to make sure we have time to go spend with our families. So the week that was, the Dow ended down. They all ended down. And it's notice that we're almost getting to be at 50% of where we were from that October 2007 timeframe. And we really, it's quite impressive how how far we've come in 1 year's time. When we look at the week action as a whole, it's important to note that we did have new lows set. We had new lows set in this bear market, and a lot of that was due to the uncertainty. Specifically, we're in a transitional period here where we have one president leaving and one president coming in, and there's probably some concern about, who's handling this economic crisis? If one's heading out the door and one's coming in, who's going to be stepping up and making any necessary changes? The biggest example of that would be what's going on with the auto bailout. That they showed up in private jets, which is interesting because I don't know what did the Bear Stearns and the AIG, what did they show in? Although there was all those stories about AIG and the 400,000 spa trip. But my point is that in this time when there's no one clearly in charge, who's going to stand up and fix things? And I think there was a lot of uncertainty there. So when you look at it, we have the entire gains on the S&P 500 since 2002 wiped out basically in 1 year. We had Citigroup, the stock price collapse, and the week started off with their CEO giving a town hall, and I think they cut something like 40 to 50,000 jobs. Although they didn't cut any of their executive bonuses, but that happened. And then now you look at the stock price now, and it's basically, as I was reading on a website, that it's basically the same price as their ATM fee. As we talked about, the CEOs from the automakers flew to Washington in private jets. That didn't go over too well. The FOMC minutes that on Wednesday showed that the government has lowered their GDP projections from 2.8% down to 2%. And they're saying that there's going to be more contraction in 2009, the first half of 2009. Weekly jobless claims surged above 500,000 to 542,000, which means probably we're going to see that November will be the 11th month this year where non-farm payroll jobs have gone away again, declined. But we did have some good news. We had Hewlett-Packard pre-announce their earnings. That helped with the market. We did have a rally there on, I believe it was Thursday or Wednesday. Little rally there, a little short color rally. But then we had Friday where we did make new lows again. The market was down 1% on Friday. And then it was leaked right about 3 o'clock, I guess, who our new president is going to hire or who he's putting in charge as far as the new Treasury Secretary. And that's going to be Timothy Geithner. He's the New York Fed president. And when that announcement came out, the market rallied and ended up 6.3%. So that it basically rallied almost 7%. And again, that goes back to my original point of uncertainty. Now that we know who may be in charge, who will be in charge under the new president, and this person is looked favorably by the traders, that caused a rally. Will that rally continue tomorrow? We'll see. I mean, we were joking on a Thursday night. We were joking that, look, we rallied so hard, it's going to continue tomorrow. And, I said, well, yeah, that's what we thought last week. And of course, the market did gap up and then fell. So who knows? Other good news is Home Depot also had some good news coming out this week. So this week we got existing home sales on Monday. We've got chain deflator, consumer confidence, GDP. We got a lot going on Thursday. You see initial claims has moved up on Thursday. We also have new home sales on, Wednesday. And we have Michigan sentiment on Wednesday, Chicago PMI on Wednesday. Why? Because the market is closed on Thursday. Hopefully we all have plenty to be thankful for. And no economic data on Friday, but the market is open on Friday. So watch Wednesday and Friday for, as volatile as the market is now, watch out on Wednesday and Friday because with low volume, the market could go all over the place. So tomorrow we got existing home sales. Really nothing going on earnings. Earnings season is winding down. Hewlett Packard already pre-announced, so that's anticipated. We do have Deere this week, but not really much is really going to move the market. So when we look at the market, we basically see a couple things. First of all, obviously we're in a downtrend. And you can see that we were ready to break lower. We are below our October lows. But obviously we had that strong rally into the close on Friday. So where are we going to go from here? I keep watching the news today, and there's more coming out about the new president's economic team. So that certainly could keep us higher. I'm not sure. But I want you to be sure to notice that we are in a downtrend. We have plenty of resistance above us on all of our sectors. Let's take a look real quick. I've switched from the S&P 500 to agriculture. And again, you can see what we look at. But there are two specific sectors that I do want to show you. First is gold. Here you can see that not only did we bounce, but we bounced up above all the moving averages where everybody else is below. And here is casinos, and you can see that there is still weakness here in this sector. Those two kind of stuck out at me. Okay, we're ready to begin the educational portion of our video. We're using the book Trading the Zone by Mark Douglas. Chapter 4, Consistency. And yes, we're back to talking about risk. I know those who've been with us for a while might say, wow, not again. But yes, again, because it's one of the most important things about trading. You have to be willing to accept the risk of actually placing a trade. And actually placing a trade does not mean that you accept the risk. I would not receive all the emails that I receive and have some of the conversations that I have if people accepted the risk. The market is what it is. And there are going to be times when your trade plan does not work out. Maybe that means you need to take a step back and reflect. Look at your trade journal. See how your trade plan is working. And maybe you need to make some adjustments to the current market conditions. However, it doesn't mean you're wrong. It doesn't mean life is going to come crumbling in. It just means that that trade didn't work out. And we need to be able to say, okay, and then move on to and make ourselves available for the next trade. Trading is about opportunities. It's about percentages. It's about baseball. You know, baseball, if you hit 1 out of 3, you're a multimillionaire. You know, you're gonna make a lot of money if you're batting 300. Well, in trading, you know, that may be the case also. You're not gonna hit a home run every time. You may strike out. The trade may not work out. But again, we need to make ourselves available to every opportunity so that we can keep our percentages working in our favor, that we're going to work out on this trade. Let our winners run, let our losers cut shortly. And if we're not willing to accept the risk of the trade, then our emotions will cloud our perceptions and we will not be able to see all that's available. He says, it doesn't do you any good to place a trade without accepting the risk if you're afraid of the consequences, because your fears will act on your perception of information and your behavior will create what you're actually trying to avoid. So because you're blocking out information, you will stay in a trade that you should get out, and then that's what you fear, losing a lot of money. So you have to be willing to say, this is a trade, my criteria has been met, my rules have been met, I'm going to enter the trade, and now I'm going to exit the trade based upon my rules. A good trade is one entered and exited based upon rules, regardless of the outcome. So I want to thank you guys for participating. For our YouTube folks, you know this is just a 10-minute version. To get the full version, first will be the podcast, AccendoTrader.com. Subscribe podcast.html. If you want to be a paid member and get our stock picks every day, and our stock picks are about entries for the next day. We don't give you stocks that we've been falling forever. We want to make sure that you all get new trades each day. And also, there's our blog at AccendoTrader.com. And we're just about finished with our Accendo Trader Day challenge. We had a great review session yesterday. And there is going to be a bonus section where we're going to be trading $2,000 in the month of December to see how much we get, to show people that we can take small accounts and make them into big accounts. So thanks, guys, and I will see you next time.